Good morning, Oracles! Looks like Giga Berlin has officially received approval to open, and it looks like they are going to have a press conference on Friday to discuss this. Judging by the translations and everything I've been reading on the tweets, seems like they've been given the final approval. They will have the press conference on Friday, but there's still some last, I guess people come in and check the machinery, make sure everything works properly, just normal operating procedures for Germany. But it seems like that's it. And Omar over at Holmar's catalog had tweeted earlier in the day that it looks like both Berlin and Austin will be opening and delivering by the end of March. I wasn't sure if they were actually going to have any deliveries in Q1, and it is, so they're going to be coming out, which is awesome. And then we're going to take a look at the numbers that come out for Q1 in April, and there's going to be so few deliveries that come out from Austin or Berlin. I don't think it's going to make a huge difference, so we'll basically have a clean slate going forward into Q2 so that we can really see the difference between what it's like having Berlin and Austin open and how the run rates are looking for Shanghai and Fremont through Q1 of this year. And I almost wonder if some of this news had leaked earlier in the day, which is why the stock was being held back. It's kind of strange. The macro environment was running and Tesla was lagging behind. I wonder if there were some institutions and funds that are out there that were holding the stock back, knowing that this news is about to pop, and they wanted to keep on buying it as low as possible. It's just my take on it. I don't know if that's actually true, but it seemed just very strange that Tesla was falling way behind everyone else and not screaming higher like they normally do. It did recover nicely at the end of the day and finished up almost 2%. And of course, on the State of the Union address, we did have President Biden ignoring the fact that Tesla exists. Yet again, he did his normal speech that has to do with his Build Back Better plan and EVs and GM and Ford and all the union companies, whatever, man. It doesn't matter, clearly doesn't matter. Elon just followed up with a tweet just stating facts. Hey, by the way, Tesla created 50,000 jobs here in the US, just throwing it out there that we have created more jobs than both Ford and GM combined. But whatever, so we're going to ignore that. It happened. We get through it. We don't care. We as Tesla lovers know what's going on. We spread the information as truth as we know it, and we go from there. So I'm not too concerned about that. But the positive that did come out of that was he reiterated, the push for renewable energy and the push for EVs. And so this just reinforces my conviction in Tesla and EVs and the green revolution going forward. So despite the fact that he snubbed Tesla yet again, doesn't matter because this is the direction that everyone is moving. And with everybody moving in this direction and Tesla being at the lead, they're just going to continue to lead. And the more people around the country and around the world that become aware of EVs and the benefits of EVs, the more, in turn, people are going to see and view Tesla as an option. And with Brent crude oil this morning hitting almost $120 a barrel, we're going to see this revolution take over even faster. President Biden didn't say that he's going to release some barrels of oil out there. Really should open up the Keystone Pipeline, at least for a short period of time, just to alleviate this, because while we are looking forward to going to renewable energy, we're not there yet. So we'll see how that plays out, but with Brent crude oil going over almost $120 a barrel, it seems like we are going to be seeing this revolution really take over a lot faster. And heck, even Gene Simmons chimed in on Twitter, pointing out the same thing and saying, hey, you know what? He's like, it's not fair that, Biden isn't mentioning at all Tesla. He's like, probably because they're union, they're not union based, and that's what Biden is pushing for is unions. He goes, but they still deserve their due credit. So it's pretty cool that a public figure like Gene Simmons is even reaching out and stating this. So awesome. Thank you, Gene, for doing that. That's great. So it's just a matter of getting the information out there so people can see. And Elon actually did reply to Gene's tweet stating that in the Bay Area, it's hard to find labor over there, so they have to be competitive. They have to offer a lot. And the UAW actually abandoned that factory and all of those workers, so Tesla came back in and picked all of those workers back up. And Elon invited the UAW to come on in and try to unionize there if they wanted to, so we'll see what happens after that. And speaking of the UAW, Ford has now officially announced that they will be separating their company into two different companies, Ford Blue and Ford E, between ICE vehicles and their electric vehicles going forward. So now this is really going to be able to open our eyes up, and we'll see how they play it with financials to see how profitable or not profitable their EV business is. So I kind of like the move from Ford's side. Of all the legacy automotive makers, Ford is the one I would be rooting for because Jim Farley really understands and he gets it, or at least it sounds like it. Jim is saying, Tesla's got the lead. We need to be more like Tesla, and we need to be open and just be like, look, here's the reality of our situation. We are in a very hard place right now. We have to make this transition. This is what we're going to do. It's not going to be easy. But he's being realistic. He's not throwing fluff at everybody, and I kind of appreciate that. So congratulations, Jim. I appreciate your honesty. So we'll see how it goes for Ford going forward. We'll see how their financials look. But this is really what's going to tell us how far ahead Tesla is from everyone else. And we're looking at Rivian cranking up their prices on their truck. And a lot of people are canceling the reservations because of this, because it's coming out of the blue. And Rivian's like, well, we need to make up because we have such negative margins right now. And this is another reason why Elon had stated that the Cybertruck, the hardest challenge of it is making it affordable. So that's part of the reason why they're kicking that can down the road. They also didn't have the batteries for it. But it's expensive, and Elon knows it, and Rivian is now proving it, and Ford is going to have that same problem when they come out with their Lightning. And so a pattern that we have seen forming in the stock is a bull pennant pattern. So it's where you're going to get a candlestick and then a flag coming off of it. I'll try to get pictures up for you guys later if I can. And so that's what it looks like. And there's actually a lot of stocks in the NASDAQ, even the SPY is looking like it. And it was from that big drop that we had last week on the day of the Russia-Ukraine invasion. And so this bull pennant that is forming is a bullish pattern. So typically what happens with this is it comes to a peak, very much like the wedge patterns that we discussed previously, very similar to that. It's going to come down to a peak, and then you're going to see a breakout or a breakdown. Usually it's a breakout. So looking at what we've got going in the macro environment, Jerome Powell had spoken yesterday about how, we're looking at interest rates going up, might only be a 1 instead of a 2-point increase. So we'll see how that goes, but the market seemed to rally and cheer this. And now, as we talked last week about how, the bottom that we hit last week from the invasion day might, supersede the pullback that we were going to potentially see in March. And if that happens, we might actually see a bit of a run that goes on. We do still have the CPI data that has to come out next week, so that could lead to some uncertainty. And I still think for the next 6 to 12 months, we're going to see some weekly uncertainty. There's different information and different stats that come out every single week that could potentially influence the market. So we need to pay attention to that. But, if we come in line all along the way and we see that interest rates going up are having an effect and keeping inflation in line, and the Russia-Ukraine situation doesn't get out of hand, I think we might see, more green. But as we see more green, we can also see a pullback from that green. So just be ready to invest wisely according to what's going on with the uncertainty in the market. But with Tesla, with so many positive catalysts coming, it's going to be hard, and we're going to see it hold up really strong, and any pullbacks that we get, I think, are going to be great buying opportunities. So while I do still think we may see a pullback, I don't know if we're going to pull back to that 700, low 700 range again. I'm ready for it either way, but it's possible. And going forward, though, we've got, the Berlin and Austin factories opening up. Shanghai 2 is going to start construction soon. We've already got the expansion in Shanghai going. We're going to have, I'm guessing, with Berlin and Austin opening up, might see that credit rating go up from the S&P. If we don't see it in March, we will probably see it after Q1 earnings. And if that is the case that we see it after Q1 earnings, watch out, because I have a feeling we're going to see an explosion in the stock price after Q1 earnings. If certain things come in line, if we stay over 30% margins, if we show run rates of 1.4 million vehicles coming out of Shanghai and Fremont alone, and if we get the credit rating going up. If we get those things all in line coming out of Q1 earnings, I think we're in for a wild uphill ride. And then going into Q2 earnings, if we hit 30% margins again, and then Austin and Berlin are ramping at the same speed as Shanghai did when it first opened up, it's going to be an amazing, amazing year. While there may still be a lot of major macro influence on the stock price, pay attention to those fundamental pieces I had just mentioned, because if the stock does come down for any reason other than these fundamental key pieces, and these fundamental pieces continue to grow in that manner, just keep on investing, because once we come out of the macro uncertainty, the stock is going to rebound to where it should be based upon that fundamental information. And now to go back in history just a little bit, just 1 year. 1 year ago today, we were trading at $200 lower than where we closed today. And then a week later, we had crashed and we bombed down to the 540 range. So, we've hit our bottom last week, so now it's time to climb. We'll see, again, a lot more different macro uncertainty now than we had last year. But last year we hit 540, and that's when we started to climb out. We had a couple of little dips after that, but never got down that far. So, with us hitting $700 last week as a bottom, is that the bottom that we're going to hit? Are we going to go below that or not? Because don't forget, over the last year, the company has grown fundamentally significantly. And last year we did see that, a couple of months afterwards, we saw a secondary dip that went down relatively close to where it did the first time, down to 550. It did not hit the same deep level as it did before, but it was after that second dip that we started to climb back up. So perhaps we mirror what we did last year. Maybe we go up a little bit and then we're going to come down in another couple of months to hit another low. But then it was at that point that the stock started its climb and just kept on going up little by little over time. And so if we mirror what we did last year, we're going to see that dip down, and then perhaps in May we end up getting another secondary dip, another good buying opportunity, and then we climb from there. And we would climb going up into Q2 earnings in July. We could get some positive information out of that, maybe a stock split. And then we go forward into midterm election time, which could cause some more uncertainty. And then we get to Q3 earnings at the end of October. Lots of different stuff to go over, lots of things to discuss later on, but just looking ahead down the road to the future of the stock this year, there's still those ups and downs. What the timing is going to be on it, I don't know. How much we will fall if we fall, again, I don't know. But this is why we pay attention to the fundamentals, because the fundamentals are growing at a steady pace. So take the stock price out entirely as to what you're paying attention to, because the stock price is being manipulated by so many different forces that have nothing to do with the fundamentals of the company. Pay attention to the fundamentals. If the fundamentals of the company are going up as they're supposed to be, just invest, because eventually the stock price is going to be at the level it should be at. So, and if you pay attention to how it's climbing up, if it's below where that level is, if you're looking at let's say a PE ratio you can go by. So if you're saying, hey, it should be trading at 50, and I think that's kind of low. But if you say, I think it should be trading at a 50, but it's trading below 50, that's a good time to buy. If it's above it and you don't think it should be above it, then just hold. You just come up with whatever PE ratio or formula you want to go by to track the fundamentals that you're tracking. And one of the hard things to do with Tesla is follow a linear growth type graph, because it's not. It's on an exponential growth type curve versus linear. So if you're trying to trade it on a linear path going up, it's almost impossible, because it's growing at a curve. And because it's growing on that exponential curve, it makes it really difficult for a lot of analysts to really grasp what's going on, because they focus on linear in many cases. And so they see the linear movement and they say, okay, well, if you follow this linear path, we'll be at this point in 3 years from now. When in reality, it's going to be 100% higher than that, because it's growing exponentially. And it's the more factories you have, the more you're going to grow exponentially. And whenever you have revenue attached to each one of these vehicles, when it comes to FSD, insurance, any other software that's getting attached to it, all of that is also going to grow exponentially. So then your revenues and your profits grow exponentially. And that's something that a lot of people don't understand. And, when Tesla says that they're going to have 50% year over year growth every year, and people are asking how, and they don't give them a how, and they say it's software, but it's some things that haven't actually come to fruition yet, like FSD. A lot of institutions will take a step back and say, well, it's not reality yet, so we don't want to invest in that yet. So that's where us as retailers will see this and say, we believe in the company. We have faith in Elon and Tesla to get us to where they tell us they're going, so we're going to invest in it now. And that's why, looking at the stock price, when we say buying in at $1,200 may have been high at the moment, but looking 5 years down the road, definitely a great buy. So you've just got to pay attention to it long term. Because if you are one of the ones who bought in around $1,200, and if you have not had a chance to dollar cost average, and you're still sitting on it at $1,200, it's okay. If you are a long-term investor, which I'm assuming if you bought in at $1,200, it's because you were going in as a long-term investor, just wait. If you can dollar cost average and bring your cost basis down, do so. If not, we're going to get over $1,200. It's going to happen. Just be patient. We're going to get there, and you will look back at this in 5 years from now and be grateful that you bought in at $1,200. Again, this is not financial advice. I can't predict that it's going to be happening for a guaranteed fact, but that's the way I am playing this, and that's why I am investing the way I do. Let me know in the comments below, how excited are you for Berlin and Austin to open up, and who do you think is going to actually deliver first? Do you think it's going to be Austin, or do you think it's going to be Berlin? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.